Aurora released their latest earnings report last week, and they're about as good as you could hope for a company like that. We'll review the numbers soon, but the why is more important. Even in the early days when competition was very weak, Aurora had a terrible reputation for quality. The San Rafael brand had some early popularity because it was less bad and more reasonably priced than most. But that quickly changed as the overall market strengthened, and they took their time doing so. For this reason, I'd written them off, but for the purpose of this channel, I tried some of their brands again, and I found something very surprising. San Rafael seems to have regained their popularity by becoming one of the best products at their price point. I bought 2 eighths from them. One was $21 plus tax, the other was a little under $20 including tax, and they're both quite good regardless of price. Just for context, there are other products with higher price tags like $25 to $30, but lower quality, which needless to say don't sell very well. But their Drift and Daily Special brands had improved a little bit at best. I tried them too, and I would give them like a 6, 6.5 out of 10, whereas San Rafael I'd give 8.5 or 9. And despite the fact that those brands are cheap, also around $20 an eighth, bud tenders indicate to me that they're not very popular. Okay, so why don't they just ditch those other brands and just become San Rafael? Problem is, different facilities are capable of growing different levels of quality. I don't have first-hand knowledge, but there's a good chance that their Drift and Daily Special facilities require a fair bit of reconstruction before they can grow a product at the same quality that San Rafael is at. Hopefully they're in that process, but I don't know. They have another brand called Whistler, which delivers reasonable quality, but it is way overpriced. And for that reason, it doesn't really sell. In fact, I haven't seen it in a while, and they may have discontinued it, and they may be using those facilities to grow San Rafael. Again, I don't know, but seems like a reasonable thing to do. Looking at their numbers, somewhat annoyingly, they only report their last 9 months and don't break down the last 3, so I had to do that. And when I did, I found that their net revenue increased about 4% quarter over quarter, in a seasonally weak quarter no less, and they decreased their cost of goods by so much that they increased their gross profit by about 10 times. But then you subtract their operating costs and they lost about $21 million last quarter. And when you look at their balance sheet, you see both cash and debt, so they are at least liquid. However, they've been maintaining that over the years by constantly selling shares. Will that trend continue? I'm not too sure, but if they are in fact improving all their facilities to grow at the level of San Rafael, and either focus on that brand or scrap their other brands and create new brands that are of that quality, they could be buying back shares in a couple of years. But are they in fact upgrading and increasing their quality across all their brands? I'm really not too sure, but I'm going to try and find out. If you'd like to learn what I learned, then you should like this video and subscribe to this channel for updates.